Money in the bank.
So, Brett, we have a quick update, and I say quick, but it's probably going to be just a normal episode worth of update because they finally passed the official coronavirus relief package here in the United States.
Right. Sorry that all these episodes are very point in time specific lately, but there's a lot going on now, and so we want people to be as informed as possible that are listening to this podcast and not just to the crazy news media.
Yeah, exactly. And we just wanted to come on and give an update because our last one we gave the disclaimer that they hadn't quite hammered out all the details yet, but we wanted to get that out just to give you a heads up, and now we can kind of solidify some of those details. So, Brett, for your trivia question, how much interest are people being charged on their student loans right now if they are federally backed?
Oh, I know. It's 0.
Oh, okay.
Oh, man, I pay attention.
Right.
Oh, my gosh. Yeah, we're trapped in an environment where I see the news constantly, so...
Yes, we are. So I have some different categories here, so we'll just kind of go and run through all of these. They may or may not all apply to you, but, just kind of keep listening because we're going to cover a lot of ground here. So the first one I want to talk about is those sweet, sweet checks that people are going to start getting in their mailbox. You're going to get about $1,200 in the next 3 weeks from the federal government if you filed your 2019 tax return, they're saying now. They changed it.
Yeah.
Okay,
so it used to be the 2018 tax return. So now they're saying 2019. So that means the one that was due this month, right?
In April, but then now it's not due until July.
Yeah.
So if you haven't filed it yet.
Federally, like we talked about last time.
Federally, yep. Not state. But if you haven't filed it yet, which maybe you haven't because you got this delay, then you can go ahead and use your 2018 reported income. And the way that this is technically going to work is that it's a tax credit that will, so if people lose your income in 2020, let's say you made too much money in 2019. So If you made over $75,000 as a single person, then you don't get your $1,200 check in the mail, right? So if you made $80,000, you get a reduced amount, but you don't get the full $1,200. Well, let's say you lose your job in 2020. Right now, let's say you lost your job and your income is only going to be reported at $30,000, then you will get a tax credit for the difference next year when you file your taxes.
Sweet. That's right when I need the money.
Yeah, and couldn't be more complicated.
Right. Okay, so that's some silver lining is that if you lose your job now, in the future they're going to compensate you.
1 year.
You just gotta tread water for that year, right, and get by, and then they'll be able to give you $60 or whatever it's gonna be.
So again, this doesn't work great if you're somebody who had a good reported income in 2019 and now you're feeling the hurt, but this is their way of trying to do something.
Right. So if I had the worst year ever in 2018, then I am banging on all cylinders. Well, I guess it would have been, it was the reporting year for 2018. Yeah. So if I had a terrible year and lost my job most of 2018, and now I have a great job, I get this tax credit still, right?
Well, maybe. Not if somebody can claim you as a dependent. So all the college students that are sweet, I'm going to get this $1,200 check in the mail. No, probably not, because your parents are probably still claiming you as a dependent.
Right, because how long can you do that? Until you're 26?
Until they're 26, I think, with the health insurance and stuff. And most college kids I knew did not have their own health insurance and were not supporting themselves 100%, and their parents definitely wanted that tax credit. Yep. So your parents instead are going to get $500 for you because you're still a dependent. So every kid that you have, you get $500 for.
Flat rate?
Mm-hmm.
Okay.
So, and they say that these payments should be kind of hitting within 3 weeks, which, again, people could use this money now.
So do we know yet now that it's between 2018 and 2019, can I choose the worst of those 2 years?
No, so
request?
If you filed your 2019 tax return already, that's the one that you need to go with.
Okay.
And then if you haven't filed it, they're saying you can use your 2018 income.
Right.
So it's not like you can just pick the lesser of two evils. And like I said, it'll really kind of catch up to you in 2020. So let's say you did qualify for it based on your 2019 income, but then you're working for, Zoom, who's doing incredibly well, and maybe you get a raise right now. and you go over that threshold, then you might end up like owing some taxes
next year.
Yeah.
Right? Okay.
So it'll all catch up eventually.
Yeah, I'm sure the people that don't need the money the most are going to end up with the most money. It's just kind of how it works.
Yeah, but I do want to also talk about now unemployment benefits. So these checks are kind of this like stimulus thing that we can have all sorts of our own opinion on if they're actually going to help people or not. Well, where I think there's actually going to be some help is with the unemployment benefits. So this, if you can prove that you lost your job, not worrying about what you made 2 years ago, but current situation, if you lost your job, you can file for unemployment. Now, this is done at the state level. So the amount that you get varies, but it's typically going to replace about 40 to 50% of your income. And you might be saying, oh, well, that's not going to, really do it for me. Now, the benefit here is the federal relief for this program actually is going to add $600 per week for everybody on unemployment.
Right. So this is actually a pretty huge benefit, in my opinion, at the surface level from my understanding of being, streaming the news into my eyeballs 24 hours a day. Thanks, Mom and Dad. We are up to date with if I got fired tomorrow, I'd get at least $600 a week, right?
Plus some the state benefits.
Plus the extra benefits for where you live.
Yeah. Correct. So, I mean, that's like $2,400 a month. That's, really going to help people in a lot of areas. Now, again, it depends on your cost of living. If you're in New York City, I understand that that's not going to cover all of your bills, but hopefully paired with the state unemployment, that extra $2,400 is really going to be enough to help you feel comfortable during this time.
Right. And I don't know how much you know about this, but is that like per person or
that is per
household?
Unemployed person.
Wow. Okay.
So if we both lost our jobs, then we would get this. If only you lost your job, then just you get this.
Right.
I don't get like a spouse benefit.
And is the benefit, how long does it last?
I believe they said that the extra $600 will currently last until early summer. Okay. And then they're going to kind of reevaluate and see.
All right. So at least a couple months.
And then unemployment, now they're saying you'll have extended unemployment with your state. So previously, states could kick you off unemployment after so many weeks. Now, again, it's state by state, so I don't want to give a number here of what exactly to expect. It won't go over 39 weeks. That's kind of the longest that any state will let you be on unemployment, but they are extending it a little bit with this federal support.
Sure.
Okay. So the other thing I wanted to mention here is perhaps you're saying, hey, I didn't technically lose my job, but my kid's daycare closed and my spouse and I couldn't make it work to have both of us going into work every day with our kids out of daycare. If you left your job because your daycare closed, they're also going to cover you. So I'm sure the paperwork on that one could be a bit of a nightmare, but just something to kind of keep in mind if you're in that position where, you're like, I didn't technically quit, or I didn't technically get fired, but I had to quit because of the coronavirus and the strain that I put on my family. I would go ahead and, just at least reach out to your state's unemployment and see if you'd qualify, because you probably would.
Right.
And one more thing, it's also expanded for self-employed people and like gig workers who previously were not covered. So typically you only got unemployment if your company paid into like the, unemployment tax. Mm-hmm. And so you had to be kind of like a W-2 employee that got fired. But now if you are, self-employed, or if you're a gig worker like Uber drivers and all of that, they're expanding the pool of people who can apply and receive this benefit, which is a good thing.
Yeah, I can imagine that process is going to be complicated to navigate, because I feel like the offices that are controlling this are very unused to that type of a workforce. And I can see it being complicated where if I drive for Uber or Lyft or multiple things, and then I say like my business has been reduced, I'm like not getting as many rides because people aren't out as much anymore. Like I can't really be like fired from that, right? I mean, I could be like, if I get a 1-star rating, I can be fired from it. But
so the other group that it's actually going to start covering as well, though, Brett, is people who were full-time and got dropped down to part-time. Okay. So I think if you can prove that here's, my pay stub from February and here's my pay stub from March, and obviously my hours are a lot less or my pay is a lot less, I think that they're going to be pretty flexible working with you there. So yeah, I've also known of some people directly who, got called into their office just last week and were told, hey, everybody at the company is now going to be an 80% employee instead of a full-time employee because we need to reduce your pay by 20%,
right?
Which is never fun to hear. And so if your pay got cut by 20%, then you might also qualify for this. So kind of really expanding the scope. So I would say if you are impacted or your job has been impacted in any way by the coronavirus, your salary got cut, your hours got cut, you lost your job, then I would definitely research unemployment in your state and start filling out the application to see if you would qualify.
Yeah. So on the surface level, it seems like this is pretty generous to me, right? It almost seems too good to be true for like, there's a lot of people that are impacted right now, right? A lot of people are losing their job. There are a lot of benefits to be had here. I'd be curious to hear from, our listeners and other people as this goes forward and they start releasing some of the money and right, all this develops over the next couple of weeks. If people are having like problems with this process or like what they're running into, or if they're saying, this is easy. No, it's totally great. Like they did such a good job, like facilitating this and I got my money real easy and it was all direct deposited and, it's all rosy, or like, oh, this is a horrible nightmare. And like, I had to wait 6 weeks on the phone to even be able to talk to somebody because my data was screwed up or whatever.
Yeah, I'd be very curious to know because you might be saying, why don't you sound so sure of yourself, Angie? Usually you come to the podcast with facts. Well, it's because a lot of this is very like uncharted territory. And so they're saying all the right things. But I'm, cautiously optimistic that every state's unemployment will implement this all the way that it's supposed to be done and treat everyone fairly. Sure. And I think, hopefully it's a very easy process. I could also see this being a really like paperwork intensive process to kind of get everything pushed through. So I'm hoping it's easy, but I just want to kind of warn people that like you might have to bring a lot of different documentation to the table to prove your case.
Right. And if you've already been released from your job or, this applies to you and you're trying to get the money back, probably earlier is better than later than that happening, because in like 2 months from now, if somebody's let go or a lot more people are let go, because we have to like still be hunkered down for like that long, the money may, kind of start drying up at some point unless they release like another package, right? Or release more money into this current package.
They're just printing it at this point, right? So
they are, but like if it's
hot off the press.
If there's like some kind of like budget that goes to each state in the back end, right? Like we don't know how this like flows or is tracked or is monitored. Correct. Or like where these budgets come from. It's not just like an infinity symbol in like their budgets all of a sudden. Yeah. Realistically they're just going to print as much money as they need to, but I think on paper that would make the systems explode.
Yeah. So let's kind of move on and talk about the next one. We alluded to this at the beginning. Student loan payments are suspended until September 30th of 2020, and for any federally backed loan. I want to make that distinction. If you've refinanced your loan and you're with a private bank or company, this does not apply to you. But if you have a federally backed loan, like a direct loan, this will apply to you, and they're suspended automatically now. So you don't have to log into your account, hit any buttons, call anybody on the phone, probably because people were overloading their call centers.
Sure.
So you can log in and confirm this, but you should not be being charged any interest, and you should not have to make any payments until September 30th. And you might be saying, oh, well, I want to qualify for my public student loan forgiveness faster, so I'm going to keep making these payments. They said that these $0 payments that are suspended are actually going to count towards your 120 payments that you need.
Oh, that's a big bonus.
That's very sweet. So there's no interest right now, and you're going to get these payments through September counting towards your public loan forgiveness.
However, for the people that are going after that student loan forgiveness program, make sure to print screen that statement wherever it is, right? And make sure to like still take diligent notes of like, here's the payments that I made. Here are the times that I paid like 0 payments. It was inside the window that 0 payments were allowed. I started resuming the payments when I like had to. You be very attentive to this because, right, probably the people managing that program, they really don't want to pay a lot of money out of that program, and they could burn people when this stuff starts back up again.
But I should also say that that also likely assumes that you're still doing your public service job.
Sure.
So I don't know how that works if you get let go or have a career shift, right?
Right, because you needed like continuous employment for that, basically.
Yeah,
Something
which
like
I think
that.
most people in that work are probably fine right
Yeah,
now.
if you're in the medical field right now, there's no job shortages.
Or teachers.
Right,
I mean,
for that
teachers
part.
are, bless their heart, they're like converting everything to online learning and dealing with that whole disaster. So I think most people are fine, but I did just want to make that quick caveat there as well.
Okay.
So the next one I want to talk about is retirement accounts. If you are currently retired, if you are that, 59 and a half and above population or 70 and above, where you have to start taking required minimum distributions. So there's a law that says, if you're 70 plus and you have these IRAs and 401ks, you need to take out so much money per year. You can't just like leave that account there forever until you die. They're like, nope, this is a retirement account. You are of retirement age. You got to take some money out.
Right.
They're actually going to suspend that this year because they don't want to force retirees to take money out if they don't need to when the market is down. So that's nice.
Right. Okay. Yeah. Because if you were still in some of the higher risk funds at that point for some of your money, that would be bad news bears if you got forced out when the market dropped.
Yeah, well, we could talk about
points.
sequence of return risk and why it's a good idea when you first retire to move to 60-40 and then move back to a 90-10 glide path if you want, Brett. But I don't think our listeners are particularly interested in that. But I do know of some 70-year-olds who are in that 80-20 to 90-10 or even 60-40 allocation. And bonds are actually getting hammered right now, too, with interest rates dropping so much. So your retirement accounts might not be looking so rosy. If you already have enough money where you can let it ride and not touch it this year, then great. You don't have to take money out, which is good. And the other nice thing is if you are younger than that and you're not quite retired yet and you need the money, like you're like, I absolutely, the unemployment's not enough, the check in the mail's not enough, I need money for some reason, you can withdraw it from your 401k now with no penalty, but you do pay taxes on it.
Yep.
The approach I always recommend, if you can, so if you still have your job, because if you lose your job, you can't do a 401k loan, but if you still have your job, you can do a 401k loan. And now they've changed it where instead it used to be you could only take out like half of your 401k balance up to $50,000. But now you can take up to $100,000 out no matter what your balance is. So even if it's $100,001, you can take out a loan up to that amount. And the nice thing about that is it gives you a plan to pay it back. Now that implies that you have some sort of continuous job and income.
Right.
But maybe if one spouse loses a job and you're trying to, juggle just some equity right now, that could provide some relief as well.
Right. We've talked about this one before. It's a pretty double-edged sword, right? You need to be very cautious when you do take out a 401k loan. It is not the same as like a personal loan or a bank loan. It's really intended for like a very short term, and by intended, I mean people that like know how to navigate the system well, right? It's only intended for like a very short term turnaround. I need like, cash real fast, not to pay off my loan shark, but to like, put this, like, I need to buy this house in cash real fast, and then I have the ability to pay it back in a relatively short amount of time. Not because there's a bunch of interest on it and stuff, but like you don't want to just like leave that like debt just hanging out there because it's hurting you, right? You're taking your own money out of the market in a huge volume potentially, and right, you don't want to do that long term.
Especially in a time when the market's already been depressed and it's not necessarily the best time to
start drawing
it out, right? Yeah. So yeah, and and like I said, you can also do a withdrawal, kind of the same disclaimer there. So sure, there's no penalty on that now. Usually you're hit with a penalty if you take an early withdrawal, but keep in mind that unless you need the money, so if you have a need, take it, right? That's a source for you to tap into. But if you're just like, oh, it would be nice to do this right now, like it would be nice to have a new house or nice to have a new car. This is not a good nice to have scenario.
Right, or it just makes you feel more comfortable or safer in this time of turmoil, right?
Because you are hurting your future self tremendously and hurting your future retirement date tremendously by taking a withdrawal.
Right. So if you can weather the storm, and just eat more rice and beans and, not need to take the money out, it is greatly advised to do that strategy still.
Yeah.
But
Now I have two more topics I want to run through here. Rent, if you cannot pay your rent right now, your landlord is, if they have a mortgage held by Fannie Mae or Freddie Mac or any government-backed lending service,
which is a really probably likely scenario
Yeah.
for most landlords.
well,
I mean, you're living in some like other places where they own the place outright in cash or whatever. But
no, so I would say about maybe 50% of mortgages are backed by Fannie Mae, Freddie Mac.
and the rest are private equity.
Yeah, because jumbo loans, so anything over $500,000 is typically not going to be backed by.
So if you're in an apartment
So
complex,
if you're in an apartment complex, this
Yeah.
probably doesn't apply to you. Or, just if you're in like a 3-unit building in Chicago, because those have been so expensive,
Yep.
this probably does not apply to you. But if you are in a unit held by somebody backed by Fannie Mae or Freddie Mac, they cannot charge you fees or evict you for 120 days now.
Right.
Because they're getting provided relief on the back end.
They cannot charge you late fees for late payments.
Correct.
So, or missed payments. They still, right, you still owe them the rent.
Right.
We're not saying that, but they can't charge you like a $50 fee
For
missing,
non-payment.
for missing your payment by the first of the month.
Right. So if you can pay your rent, still pay it now because you do owe that balance still, even if it's delayed into the future.
Yep.
But let's say you're like, I'm going to get this money to you, but I'm, doing some prolific surveys, so it's going to take me an extra week to get the, final $50 I need or whatever, and you delay it a week, then don't let them charge you a fee for having a week late fee, because
Right.
the mortgage companies have to be understanding of landlords who are paying their mortgages late.
Right. Exactly.
So that's the trickle down effect.
Yeah. And so be careful with that, because a lot of automated systems or digital online payment systems are, automatically going to build in that late fee if you miss the payment. They don't know what the new rules are, right? So just be careful of that, because the company should have to go into those systems manually and waive that stuff if it is automatically applied. So buyer beware.
Yeah, absolutely. And the last one I wanted to run through is charity. So let's say you are fortunate to not be impacted by the coronavirus stuff right now, and you still have your job, and you're like, I want to do something to help out. Well, next year on your tax return, if you make a donation up to $300, it can actually be deducted from your taxes, even if you don't itemize, which is very nice.
That's awesome.
Yeah.
Yeah. A lot of people just get burned from like doing good stuff or trying to, get their tax rebates, and then they don't itemize anyway, and it was all worthless, right?
Yeah. And for Bill Gates, because he probably listens to our podcast too, you can actually deduct all of your charitable giving for the year, sir. So usually there's like some limits on it, I guess. But let's say he makes $25 million this year. If he donates all 25 million of that, he can write it all off and not pay any taxes. So they wanted to kind of beef up the charity. I guess that would also apply to any income bracket. So let's say you make $50,000 and you donate all of it, you don't have a tax liability. Usually there are some limits surrounding that. I do think they're fairly high typically, because I know people like Bill Gates and Warren Buffett write off a lot in charitable deductions every year.
Right,
But
and most companies as well. So hopefully that does really, I mean, that was, in my opinion, that's a pretty good thing to put into it, right?
yeah,
Because like now big companies that are doing well, like Zoom, right? Or even Microsoft or any of the big like tech companies right now where everybody's working from home using like screen sharing and stuff, or more internet or collaboration tools, like those companies are killing it. And they, you're right, they get to basically not pay any taxes for an undetermined amount of time until this goes into play.
if they donate all of their income.
Which they will definitely, they'll donate enough, right?
They have a team of people figuring
Whole
out
departments
exactly
to
how
figure
much.
this out. Yeah.
Yeah.
Yep.
But it's a good thing for charities because there's a lot of people doing really good work out there, making masks and ventilators and all sorts of great stuff right now to help with this.
Right. And
pandemic.
food pantries and taking care of people that, are on hard times or handing out, things people just regularly need. So
Yeah,
thank you for everybody that is doing that stuff out there. Right. We really appreciate it. Everybody is, really in your camp. Again, we thanked all like the nurses and medical staffs and everybody that's like really in the weeds right now and like really having a hard time. And like we know a lot of people that have graduated and are in medical school or just getting out of medical school, and they're just like, we didn't sign up for this nightmare, right? Like
Right.
people that are like and the people that got pulled out of medical school to graduate early to just get thrown into the deep end here, right? And they're just, they're watching some really sad stories happen right in front of their eyes, like really unprepared for that, right?
Yeah.
So,
But, from the medical professionals all the way down to the people stocking the grocery stores right now, we really do appreciate you all. We notice all of your hard work and efforts. It really doesn't go unnoticed. There's so many people kind of keeping everything going right now. That it's a team effort, right?
Right.
And everyone's doing their part. Brett, the last thing I wanted to talk about, and this is totally a sidetrack, so feel free if you were just here to learn about the coronavirus relief package to shut this off. But I've seen a lot of people on Twitter calling this coronavirus epidemic the end of the FIRE movement, which I just want to talk about real quick at the end here, because I know a lot of our listeners try to save a lot of their money. There's a lot of people that we know that are part of this movement that want to retire early someday, and I know we ourselves have talked about this potentially as well in the past.
Right. So FIRE means financial independence, retire early, right? It's a little acronym.
Right.
And it means you've accrued enough money to hit a particular number that you've calculated to move into your retirement phase, quote unquote, whenever you reach that dollar amount, rather than reaching 65 or 70 or whatever your country's retirement standards are.
Right. And we always, shy away from being the retirement police. So I always kind of focus on that financial independence number, which we've kind of talked about before with the different stages of FU money, but just giving you that level of comfort in life to know if something changes, I can weather the storm, or if I decide that I don't want to do my job anymore, I can make a change. And so there's a lot of people saying, oh yeah, haha, all these people who thought that they could fire, I bet you're going to have to go back to work now, and you're probably going to have to work later because you maybe left the workforce. I actually know several people who have fired in the past, and my take on it is that people who are naturally frugal, you can't be part of the FIRE crowd and not be naturally frugal. It doesn't really make sense. I think they will weather this economic crisis very well, because those are the people who are really good at getting down to bare bone expenses when they need to, and living a very simple life, and living on rice and beans and meal planning and prepping and keeping their expenses really low.
Right.
And those resilient traits do really well in a recession.
Right. People that were living like way below their means, right? Meaning like the income you were making is like super excess compared to like what your expenses are, versus the people that were living way outside of their means, meaning that they were probably over leveraged, had a lot of debt, bought 2 brand new cars and a brand new house, right? And are, buying like $2,000 worth of groceries every month on the extreme end, obviously. Those people, it's a huge shock if like one or both of those people lose their job, to change their lifestyle down to like, what are we going to do? How do we cut back? How do we eat less? How do we only eat rice and beans or whatever is the cheapest model, right? At this point, right? That's just a huge lifestyle shift, right? So yeah, the FIRE movement community, like as you said, are pretty frugal by nature. And people that are not part of the FIRE movement community, there's also very frugal people, right? Like Warren Buffett, pretty frugal guy.
Yeah.
A lot of Silicon Valley tycoons from the last, 20, 30 years, known to be pretty frugal people, right? But still have made a ton of money. But
I would say most people who are FIRE or have their mindset on FIRE that I know personally that are still working, if they lost their jobs and their income got replaced with 40 to 50% of their income with unemployment benefits, that would still completely cover their expenses, because they're used to saving 50 to 70% of their income.
Right. So maybe they just
don't get to save as much. They just get
to save less. Yeah.
And then for people who are already retired, I have several friends who are in their 30s and 40s who have already pulled the plug on working. They are just pretty good at adjusting their expenses when they need to. So they probably already have 6 months of their expenses sitting in their savings account. And in a pinch, they can turn that into 9 months of their expenses, because their expenses are so low. And maybe they, paid off their house before they retired. So they don't have a lot of cash outflow. And so they're just like, all right, we're not taking a trip this year, or we're not doing anything, which is really easy to do right now, because nobody, at least where we live, we're not allowed to go anywhere.
Right.
We have a shelter in place. So it's pretty easy to not spend money when you're just stuck at home all the time.
Right, you're really eating down that pantry. But yeah, it's been an interesting couple of basically months now at this point since we really started finding this stuff out. It's really for the people that have been, kind of packing their emergency fund and paying attention to what we've been talking about for the last, couple of years now that we've been doing the podcast. Putting things away, getting set up for, an emergency scenario, and maybe you lose your job or whatever. This is the Super Bowl, right? For everybody that's been like paying attention to financial, personal finance and financial management and like doing things right and setting up your life and budgeting things correctly. Like it's go time, right? Like, so putting your plan into action, making sure that you can kind of weather this storm. And for a lot of people around you probably, and a lot of your friends and family, they're probably not set up appropriately if like one or more people in their household lose their job. And right, that's just kind of the reality of where we are in the United States, at least.
Exactly. Yeah. And I will say, over the years, so many people have asked me, Angela, why do you save money? Why not just spend your money, get the things you want in life? This is why. I was a child of the 2008-2009 recession. That was when I was kind of coming of age, and it really left its mark on me. And I knew someday this is going to happen again. So how some people prep for a hurricane, I prep for like an economic fallout. And I will say there are a lot of people like me who have that fear of like not having enough food or not having enough money. And I want to just remind us all to also lead with compassion, because not everybody preps in the same way we do. So where now that I have saved up an emergency fund and I've, kept my expenses low and I feel more comfortable that I can ride this storm out, just have some compassion for people who aren't. And if you can, throw a couple bucks their way or help people get food when they need to, or help them, maybe there's somebody with kids. And I know as landlords, Brett and I are really going to be flexible with our tenants if they have a, hard financial situation because of this downturn. Just have compassion. Now is not the time to be greedy and be in it for yourself. Now's the time to come together as a community and just band together and help each other out. That's what keeps the world going. So, right. Cook something for your neighbors, drop it off, don't see them, stay 6 feet away from everybody at all times. But, just do something nice and spread some joy, because that's really what this is all about. It's not about pointing fingers. It's just about let's get through this together, and then let's learn some lessons for the next time something crazy like this happens again.
Yeah, right. We're not saying, okay, great, you prepared financially, and now you can say, I told you so to everybody else, right? That doesn't help. Right?
No.
So, yeah. Help out your neighbor if you can, if they're in a bad way. It'll all kind of even out in the end, right?
Absolutely. So. We'll get through it together, right? These are some crazy times. I know, a lot of people are having to cancel different life events and all sorts of things. So our heart goes out to everybody being impacted in any way by this. But we'll get through it. And don't watch too much news. It'll drive you crazy. That's the best advice I can give you. Just do things that make you happy. Do something that makes you happy every single day. For me, it's been doing yoga through YouTube, which is free and awesome, and you can do it right in your home. So there's a good suggestion.
Right.
What about you, Brett? What have you been doing to make you happy?
I have been researching a ton of material for a new project that Angela and I decided to start our journey on, and we'll probably talk a little bit more about executing that and getting started and what that is going to be and how long it's going to take us in an upcoming episode here.
Yeah, so if you want a hint of what he's talking about, we recorded a Passive House episode a couple episodes back that we released, and we're going to turn that into a little mini series because it is Brett's passion project. So thank you to all the people who downloaded and listened to that episode. I know it's not our typical content, but it is something we are really excited about. So we'll sprinkle those in along with financially minded podcasts as well. That's
right. And maybe some more things about cheeseburgers as soon as I can wrangle up a good place to order some local restaurant cheeseburgers from.
All right. Well, thanks for tuning in this week, guys. If you have any questions, I'm happy to be a resource. And if there's anything that we kind of glossed over and missed, please, we've had people before reach out and give us like corrections. And there was a lot of ground that I covered here. I tried to get everything right. I tried to cross-check my sources. But if I missed anything or I glossed over a detail wrong, do let me know so that I can make sure I get that corrected, since we're trying to provide some real-time data here, and I am not a journalist.
Right. And this stuff could change in the future, too. This is as of, March 28th, something like that. It's the end of March.
Who knows what day it is? Day 5,000 of quarantine.
Right. As soon as people start requesting money, they're going to change the rules. So.
All right. Thanks, guys. Hey guys, thanks for tuning in to this week's episode of Money in the Bank. Make sure to subscribe to us on the iTunes or Stitcher app so that you get weekly alerts every time we post a podcast. Or if you want, you can visit my website, moneyinthebankpodcast.com. And if you want to reach out with any questions or further comments, please email me at Angie@moneyinthebankpodcast.com. I look forward to hearing from you.
Money in the bank.